Today we're going to look at a chart that I haven't looked at for a very long time, natural gas futures. Then we'll check out the New Zealand dollar Swiss franc. Don't miss it. Hi, this is Tim from TradingStrategyGuides.com. Today we'll be looking at a bull flag on natural gas futures and a small trading range on the Kiwi-Swissy Forex currency pair. We'll be looking at those, but first we'll check out the active trades later on this week's Trading Maxim. Happy Monday and Merry Christmas this week to all of you who celebrate it. Let's take a look at our active trades. So Wednesday, the Canadian dollar Japanese yen dropped right down here and hit our full stop. That's the first full stop I've taken in several weeks. So I'm done with the CAD yen for right now. The Great British Pound Aussie dollar gave us this sell trigger right here on Thursday. Hit the first target Friday a couple of weeks ago where I got half off in profit, and Monday it stopped out right here at the second half break even. That still gets chalked up in the win category. Done with Pound Aussie for now. Apple triggered this buy on Tuesday. Got about halfway up here to our first target, and now it's just kind of lollygagging around. I'm still in this as long as it doesn't close back inside the triangle. The US dollar Japanese yen is a wacky case. This Tuesday right here, I had to leave my office early, so I checked the setups and I saw that this thing was down here showing a sell signal, so I went ahead and entered a half size position because it was low volume. Before the market closed, it pulled back up inside the range. So I kind of stuck it out, mainly because I didn't notice that it closed back in the range until the next day when it was pushing down. As it turns out, it broke out on Wednesday, and if you got it on the breakout, you would probably be in right about there. But I was in at a much better price up here at 103.62. And it hit my first target right here. This went 56 pips from here to here, so it was probably enough for those of you who entered on Wednesday to get your first target out, but this would have hit your stop on Friday. So my stop has not been hit, so I'm still in this. And as of Saturday around 1 o'clock New York time, Bitcoin is off to the races again right here. We got our trigger on Wednesday, and I bought it right there. Hit the first stop right here on Thursday, and it's still flying up. So I'm waiting for the PSAR to get up here to start trailing the stops. And that's it for the active trades for today. Let's take a look at today's trade picks. Today we're looking at a bull flag on natural gas. Now, you know, I'm not a fundamental trader, but it does seem to me that a bullish move would be supported by the seasonal use of natural gas. But maybe one of you guys who is more of a fundy guy could leave a comment below and give me some idea whether that's accurate or not. In any case, a bull flag consists of an incoming trend like this one here, and then a descending parallel price channel like this. A bull flag is a bullish consolidation, so I will only take a buy trigger on this. And the pattern is confirmed by a decline in volume and volatility right down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. And here's our trade plan. We will buy a daily candle close above the bull flag. On the breaking candle, we want to see this volume bar reach up to this volume average to enter a full size position. If it doesn't quite reach the average but does reach 75% of the average, I'll enter a half size position to reduce risk. You can calculate the percentage by taking this volume number here, dividing it by this volume average, and it should give you 0.75. If you don't get at least that, I suggest you stand aside on the trade. Stop loss is 1.5 times the ATR. First target is 1 times the ATR. So when this thing finally breaks, about 15 or 20 or 30 minutes before market close, set up your buy order right here. Take a look at the ATR, multiply that by 1.5, measure that distance down here for your stop loss, measure 1 ATR above your entry for your first target. If after entering the trade, get a candle close back inside the bear flag, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I'll only risk about 2% of my account on each trade. And that's today's setup on natural gas futures. So let's take a look at this trading range on the New Zealand dollar Swiss franc Forex pair. A trading range is a consolidation with a strong support level like this one at 62.30 and a strong resistance level like this one at 63.80. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of a trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. As I mentioned, volatility is the amount of daily movement of the price, and I measure it with the ATR. And here's the trade plan. We're going to buy a daily candle close above the range or above 63.80, or we will sell a daily candle close below the range or below 62.30. I'm not going to bore you with the whole spiel again. The management details are always the same. If there's at least average volume, enter a full-size position. If there's only 75% of the volume, enter half-size position. Otherwise, stand aside. Stop loss is 1.5 times the ATR. The first target is 1 times the ATR. If you get a candle close back in the range after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. 2% risk on this trade. And that's today's setup on the New Zealand dollar Swiss franc Forex currency pair. Okay guys, this is how I manage these trades. You do you, okay? Make sure you understand what you're comfortable with and you trade it the way you're comfortable. And to help me keep my head on straight when I'm trading, I use the trading maxims to keep myself in line. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 19, would you take that trade if your mentor was looking over your shoulder? Your mentor should be someone you look up to and for whom you have a lot of respect. A good mentor will be teaching you all the right things to do, but also holding you accountable for your trade setups. Good old Casey Stubbs is my coach and mentor. I put myself in a tight situation a few times by taking trades that didn't follow the rules, and then I would just have to explain to Casey why I did it. Of course, there's no good explanation, only wrong reasons, right? So I decided to add this question to my mantra before I enter a trade. Would I enter this trade if Casey was looking over my shoulder? That's kind of kept me out of a few bad spots. Remember our natural gas trade plan for today. We're going to buy a daily candle close above the bull flag. And our New Zealand dollar Swiss yen trade plan for today, we're going to buy a daily candle close above the range or above 63.80, or we'll sell a daily candle close below the range or below 62.30. For both trades, take a full-size position if you've got average volume or better, half size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And you can look in the description box below for a link to the trade management video if you need a reminder. Don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box as well. And come back Wednesday for the next installment of the Trading Education series. This time we'll talk about trend following. And be here next Monday for my trade pick. Our videos come out at 3 p.m. New York time. I apologize for the lateness of Wednesday's video last week. We had a bit of a mix-up with our video editors, but we got all that straightened out. Remember, I won't be doing a video on Friday, it being Christmas and all. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you Wednesday.